Good morning, guys. It takes a few minutes once you see the screen come on because I have to set up YouTube. Okay, let's get rolling here. So I think yesterday pretty much was what was expected, as explained pre-market, of a less of a consolidation day. This intraday, it looked a little bit more concerning, let's just say, especially on the NASDAQ. So we got a red day, we started with the gap down. It tried to rally, as you can see the little tail there. But by the end of the day, buyers couldn't get it going, and we ended with a red bar, but it didn't fill the gap. So a little sign of strength there. If it was really weak, it would have plunged down into the gap fill there. So a little sign of strength. Look, the trend is up. The trend is up. And here we've got, let's just call it a sideways kind of corrective trend here on the hourly chart. That being said, it never violated the major support point, which is the swing low prior to the higher high. So the depth of retracement, according to the rules that I go by, is just view this as a sideways trend because of the depth of retracement. That rule just simply says, without drawing any fib lines or any of that, is that if a retracement is 80% or more, view it as a sideways trend, even though it hasn't violated major support. So still bullish in multiple time frames, and now it's trying to get stabilized here. Got a bottoming tail bar, so there's a little buyer on the dip there, and we'll see if it can continue. We've got the Fed thing coming. There's going to be a hesitancy. There's going to be the wiggles when that comes. The expectation is for a cut. Also Apple, that's coming out. That's going to be a big one. So we'll see what the reaction is to it. It's hard to imagine a huge excitement about this interest rate cut, to tell you the truth, because it's so anticipated. The markets have held up. They've broken out here. Maybe it's just slow and steady to the upside. What we'll see. Now, as meant, I typed there the title in the clouds growing there in the YouTube channel, because these wrong way option traders, they're just getting all in here, boy. 0.88 yesterday, so a little bit of a back off, but you see with this moving averages. Now our signals come when both of these are in agreement. Now, is this an agreement? I would say no, because this hadn't reached there yet when the breath just tickled into plus 100. So, as I wrote in I believe it was in the advisory letter, maybe I mentioned it yesterday, days kind of blend into each other, honestly, but with the breadth the way it is, that I remember explaining yesterday, being so small around the zero line here, just above it, but still positive. With a breakout like that, I mean, this thing should have pegged up above the red line, being confirmation, and it didn't do that. So maybe what's ahead is, a blast off to the upside. Things obviously are in an uptrend. They look good. There's some laggards, which we'll take a look at, but maybe it's a push to the upside. Holiday season coming upon us. That doesn't mean you can't have pullbacks within uptrends. So, but this is a warning sign that these option traders are just loading up on call options, and it's really hard. I know there has been rare occasions where they've gotten it right, but it's so few that you just don't want to be on the same side of these guys for too long. We'll see where it all ends up. All right, let's minimize that. We haven't looked at this in a while, but just to mention, the noise of yield curve inversion is quieted down, but there's been a huge improvement in that. So that concern has gone away. You'll see it just kind of, this was the longest against the shortest. Peekabooed under inversion. The others had already done that, but there's been a huge improvement in that. So no worries there anymore. It's all about, I guess all about China at this point. And so we'll see how that all goes. Looking at the spiders, it was just that consolidation day. It tried to go up and it couldn't. There was the breakout and the push up to new all-time highs, and it backed off. So, we are, just looking at the weekly chart, because of the grind of the way it went up, it's hard for me anyway, to feel like we've just gone through some rally. But clearly, when we went from the bottom of the range to the top of the range, so there was a rally. It was kind of a churner, as we talked about here yesterday, kind of that grind to the upside, whereas the Qs were sideways. We'll take a look at that. But hey, it's holding up here. So let's drag our support line up to the next level here, as this did push up to a higher high. And this makes this major support, and this sideways consolidation, since there's an uptrend, is supposed to resolve itself to the upside. If it breaks below here, that opens up the door to some downside action, and we do have a unfilled gap. Let's throw that up there. An unfilled gap down here below as a potential target if it does break lower. We already looked at the Qs, but this was that consolidation that we talked about yesterday that was more bullish than the grinding kind of consolidation to the upside on that. Diamonds, just, the laggard there with some of the ones, Boeing and so on, that been just holding things down. And it was, of course, McDonald's and some of the others. But, if we do get that blast off, as I said yesterday, maybe this is going to play catch up and push up through the old highs there. And then CNBC can get their new high party hats on, because they love it when the Dow does that. Russell working its way up there, right? Continues to outperform when the others begin to underperform. Just the way it is. And when the others begin to outperform, it begins to lag. That's been the relationship there, pretty much intraday. So it's something to keep in mind. Transports, pulled back yesterday. Really not a big deal. Should really be expected. And, some hesitancy about how far things can go here, beyond the view of sentiment being where it is. It's coming up to the top of the range. Right? There's been sellers here every time. So no secret to anybody as we get up to the top of the range to anticipate sellers. Question is, does this interest rate cut, does the holiday season, end of year rally, all of that make for such a joyous holidays that everything pushes up to new all-time highs above these recent ranges? So I guess time is going to tell, but history tells me that when these wrong way option traders are so gleeful about what's happened, keep an eye on the exit door. All right, looking at the futures, they look great. All right, there's the consolidation, the push up to a new all-time high. It backed off from pushing up. Big deal. Look at where the opening closes, the red candle body. It's at the top of the prior bars range. It just was a quiet day yesterday, and we're starting off the day quiet inside of the prior range. Right? As you can see, the trading right here. Not a big deal. And Qs, well, obviously a little bit more of a troublesome day, where the red day not engulfed, but retraced deeply into the red candle. Now, we have a concept called red bars ignored. Dan and I are going to speak about that today. So the theory here, as you can see over here, red bar ignored, red bar ignored, red bar ignored, trend is up. The theory is we should get a red bar ignored. That's bullish price action. So we shall see. And if we can retrace deeply into this red bar now and ignore it. Oh, there's the pullback on the 60, which came right down to support. All right, let me mention it again for the 1,144th time. Look to the left. Don't draw diagonal trend lines. No need for fib lines. Just look to the left and see where the buyers were before. That's where they're going to show up again. And then you see if they hold. And so far, they're holding. And YM. It's doing okay. Right? Push up, consolidation near this little top tail there, going sideways. So let's move up our support line. Tight little trading range going on there. Going to be difficult to trade within that. So find things that are moving because they're just not moving here. And Russell, right, we always look at the ETF and the futures. Inside day so far, it's a quiet morning. Looking down at the bottom of the screen here, there's pretty much a lot of green. There's some nastiness going on here. Right, 41% down. I look at something like that, and it's a graphic, so it must be technology. But when I see something like that, my first thought is biotech, and so on. So I'm just looking at some names. Grub got killed yesterday, so probably stabilizing a bit there. And let's just taking a look. There's some things moving. So this is what we do. Look at the broader markets, get a bias for that. So let's call the bias for the markets here bullish to neutral. We'll see if there's follow through or more consolidation against waiting for the Fed. And we'll see what's moving here. Apple pushing up again. Right. This is, after the red day. I was a little out of it yesterday, so I didn't really see everything that was going on. But 250, I know, is one of the brokerage firm's targets. There was a 250 target, which is it. They backed off. They sold into that maybe. And there was another firm that had a target of 280. So we'll see what they do and so on. All righty, Dan, all yours.
All right. Good morning, folks.
Could they be selling the calls? Anything's possible, Lee. They're asking me on YouTube. Could they be selling the calls? I don't think about it in any complicated way whatsoever, Lee. When I look at that put call ratio, it's either neutral or at a bullish or bearish extreme. And historically tells me that if those guys are buying too many calls, like I said, watch for the exit door. Breakouts tend to fail.
Hey, Greg, can you release the screen?
And, you got to be careful there.
Hey, Greg, can you release the screen, please?
Yes. Hold on. And should we be concerned with open positions during the Fed announcement? Kenneth, if your positions are too large, then you should be concerned because you're dealing with the unknown, unless you can hedge them.
A quick glance, all our opens are fine. If you have a question about anyone, please ask. Otherwise, there's a ton of gappers I want to look at first. I am long stock. CNC. Looks higher, looks good. Oh, nice gapper there. Yeah, I love bullish consolidations in the upper 50% of WRBs with a price void. So sure, and that's after red bar ignored, gap reversal. So that, Greg, in today's MT Live, it's just so easy to find examples. We just pull up any chart you want, and we can eyeball green and red bars ignored. Look, here's a green bar ignored, but in a downtrend. So still under that is bearish. So that'll be a fun session today. Zen 72. It's gapping a resistance. PACE 208 gapping down. It's kind of a sell setup at resistance, but this is a power. These three power bars, again, negating that ugly red bar, is strength. So that suggests that it's going to make a higher low, not a swing short. OSPN, red bar ignored here. Gapping up too big though, gapping way the heck up here on my weekly chart. So I got no interest in that. Maxim, beautiful gap breakout. Now, if this one just hypothetically, gapping more to the $60 area, low 60s, then that would be a tier 1, what I define, gap play. And then that's step 1, bullish gap with price void. Step 2, is we put it in a 5-minute thumbnail and see what happens over the first 5, 10, 15, 30 minutes. But now it's kind of gapping up too big for me. You know, my target would have been 63 to 64. But still, McGraw, if we can get a put spread on this, I like it. CXO, I have here my upper right, 70.50. All right, so this is a fantastic gapper so far. That's why I put them up here. Yes, it has all this resistance over here, but it's gapping from a multi-week bottoming pattern. Target 75. So 70 to 75, $5 divided by 7 is a good percent. So this is my favorite gapper so far. This one, okay, there's not much volume, but if it is gapping to 86, then that's not bad. But because of this ugly engulfing bar, it would just be a day trade, but that's worth watching. CHRW 8270. Ooh, that's an ugly gap. Look at that. Just eyeball it here to 83. It's on support, but that's an ugly gap. 214. That's an ugly gap. Gapping over 90% to the low of that bar. That's a shock pattern. Everybody who got in here ahead of earnings is now, you know, unless you bought yesterday's low, you're holding a losing position. So that could be a call spread candidate, McGraw. Kind of a big W bottom retest here, but it's gapping down, not up. It's gapping under all of this. It's kind of holding here pre-market, but 30-minute low. This has room to $80. So that's worth watching. Putting that there. But if this pre-market strength holds, then it's not going to trigger. CYH, I got no interest in trading that. Amgen, McGraw, let's look at this for a put spread candidate. It had earnings, so the juice bar premiums should still be good. So that one I like. And, you know, your entry, you know, let's see what it does, but, you know, maybe over 10 to 11-ish. UNM, I can't tell what you're doing. Charlie Bravo 150. Yeah, you're just kind of swimming upstream. It's kind of a reverse head and shoulders on the 15-minute chart. So possible day trade long if it sets up in the first 30 minutes. G-Dot, $32, way up here. Another nasty gap. Made a new low, 20 MAs curling. You know, that's set up, but it's worth watching. Allstate, big mess. I see some, I can't tell where it's gapping. Matador, the oil stock, 1573. It's just junk. I mean, look at it. It's in a downtrend, daily, weekly, monthly. I have no interest in that. You're gone. Sam I Am is the beer company, 385. Yesterday's high, 386.50. Oh no, skip, whatever. So maybe I would never touch this pattern as a swing trade. But if it can take out a 30-minute high, McGraw, maybe the 370 put spread. Yum C and Yum also. Why isn't Yum C doing anything? But Yum is down. We'll get to him. EXTR. I like this one as a core trade. I can't tell where it's gapping right here. But look, bottoming pattern, nice close yesterday. Nice retest with bottoming tails on the weekly with a rising 20. And target, you know, 11 to 12. That would be a huge percent. I thought so. Cake, bullish 15-minute, but extended daily at resistance. Could possibly be a day trade, but I'm not going to even look at it. Top, nasty gap way down here. And so that's leaving a very bearish weekly chart. Look, it's in a downtrend. It bounced, went sideways. This actually is a pattern that whichever direction it gapped, you could trade it in that direction. If it gapped over this, then it has a price void to go up. But now it's gapping under this. Things are not looking good at the Tupperware store. McGraw, you must have stopped giving your Tupperware parties. 19 bucks. Okay, this is a beautiful gap. Beautiful because it's two red bars ignored, gapping right over it. That's a beautiful, beautiful gapping setup. Now the price void's not as good as I liked, but I'll put that in a window. INSM. Although it's not a gapper, I have keys here as a long. Keys looks fantastic, daily, weekly, monthly. Let's just see what the market wants to do. And, you know, the Fed meeting is, I think the market will go have a tizzy if they don't cut. But, you know, I think it's Fed future said something like 96% or 98%. So Algerian was talking on whatever news today, and I agree with him. He was giving all the reasons why we don't need a cut. It's ridiculous. The economy's fine. We're at market highs. It's all just the yield curve is fine again. It just, who knows? All right, 10B, 2640. That's a big gap, excessive. Oh, we got a ton of gappers today. Bib. Hey, McGraw, remember when you and I were looking at this 2-bar reversal for a put spread? That would have been a great time. I'm not chasing it. ENPH 2170. There's another good bearish gapper. Look, and it's bearish pre-market too. That looks great. I'm gonna put him here. I got extreme on my other computer, but look, this is good. Bearish gap, bearish pre-market. 5-minute low could be a short on that. Alex BDC, 48 bucks. It's a big percentage gap, so I would be less aggressive. But if it can't bounce for 30 minutes, yeah, you can day trade a 30-minute low. But you see why I like this one so much better? Because the gap's not as big. Well, maybe percent-wise it is, whatever. But I like the bearish pre-market also. All right, CNC, 53 bucks. Oh, that's the one that we looked at for Alex. I'd be looking to sell strength there, not a new trade, so I just deleted it. Crocs is too extended. Wow, this thing had quite a run in the last 2 months. And now it's gapping up. There's no trade there. You know, if anything, maybe shorting calls under a 30-minute low. McGraw, you emailed me this. That was a beautiful, beautiful, you know, gapper yesterday. And then if you drill down to a 5-minute time frame, this tail, you know, likely gave you a nice buy setup. But getting on board now, I guess it's okay, but your stop has to be yesterday's low is all. But that was a nice breakout, daily, weekly. RCL, yeah, I saw this thing selling off on earnings, and now it's snapped back. It's, you know, beautiful support below, but there's no good pattern. DPZ, yeah, I saw it big this morning. Now it's filling the gap, so that's a mess. AMAG, 10 bucks. That's a nasty gap. Now that's green bars ignored. Look, this is red bar ignored. You know what? I think I actually have this in today's today's chart. I gave this as an example of a red bar ignored, and now today with the gap down, it's followed by 2 green bars ignored. 82.50. Oh, I think we saw this one already. Yeah. Mo 114. It's a bearish gap, support below, resistance above. McGraw, this is a candidate for an Iron Condor, maybe. Let's keep an eye on that. Nick is asking about TAP, 52 bucks. I don't know what to do with that because it's, you know, it's down 4 bars already and now gapping down, and there's support here. Getting far from the 20, I just don't, it's not a tier 1 to me, so I don't know. Look at this beautiful bar yesterday. Red bar ignored here, so then it's kind of a reverse head and shoulders. You had this little small bottoming tail yesterday, which you can see on the 15-minute chart. Downside shakeout. Wow, look at this at noon. Noon, it had a little intraday gap breakout. Wow. All right, so this is worth watching. If we get a 1, 2, 3 on this, that will be delicious. One, two, three, just beautiful. J&J, they decided to not have asbestos in their baby powder. And yeah, McGraw, if you were able to get that before the news came, before the halt rather, then good for you. Look here at the low, the 180 reversal. That, you know when we trade counter trends and I say we need a something something, we need an event, this 180 reversal is your event. And then you got a higher low retest and a little gap. You could have entered over the high of this green bar, stop below, and added there. But now there's nothing to do. Wow, poor Yum. They own Taco Bell, Kentucky Fried Chicken. That's a nasty gap. Look at the green bar breakout failure at the high. Using bar by bar analysis, that would have been danger, danger. And by the way, I'm writing an article for Traders World magazine on a shock pattern.